Hey, good evening, active traders, and welcome to Preparing for Profits. I'm Ken Calhoun, your host, and I'm joined by my longtime colleague, Steve Nison from Candlecharts.com. Steve, it's great to have you here with us tonight.
It's good always joining you, Ken. We always have some exciting aspects and benefits and some strategies that we like revealing to our Candlecharts.com family and day trading family. So looking forward to it.
Yeah, and we're going to start off with the real money trade I did thanks to a hammer that put me in the money. So we're going to look at that. But first, let me ask all of you, if you guys can hear us okay, where are you from? Please, this is the part where you type in an audience interaction portion of tonight's presentation. We're going to be giving away 10 Amazon gift certificates. But first of all, let's start by making sure you can type in. So please type in where you're from, what state if you're in the U.S., or what country if you're from out of the U.S. Where in the world are you guys from? We've got Atlanta, we got Memphis, Massachusetts, Orlando, Toronto. Hey, from Canada, New York, we got Australia. We've got New York, we got Jersey. Hey, Jersey, we got Wisconsin. Great bagels in Jersey and New York. We don't get them here in Colorado. Palm Beach, Florida, White Plains, New York, Houston, Texas, Montreal. Hundreds of people registered. So Sacramento, Vancouver, New York, Tennessee, India. We got people from all over the world. Well, welcome to tonight's event, folks. We've got an exciting session for you. As always, all information is for educational use only. We will be doing our Amazon promotional contest tonight, and the way that's going to work is I'm going to be asking, what is this candlestick pattern? And from among the people who correctly answer, I'll just randomly pick somebody, and we're going to do 10 of those. Now, in the interest of time, we're going to try and get most of the content tonight done within the first 30 minutes. So we're going to try and wrap things up within around 30 minutes because we're all busy people. So if there are questions, we may stick around a bit later as well. Steve's clients have included lots of the world's top financial organizations. He's somebody who's well trusted. The only person in the world you should learn candles from. I routinely see Steve's competitors out there blow it with their candle patterns, misinterpretations. That can cost you a lot of money. So learn from Steve Nison. I'm a long-time, 15-year now money show speaker, and very grateful to be voted by you guys. Thanks to all of you who voted for me. I'm #1 in the world, and #2, gold and silver medal for the to #1 top-ranked trading author worldwide for Stocks and Commodities magazine. Reader's Choice issue just came out, hit the newsstands this week. So quite an honor. Thanks to all of you for voting me #1. That's kind of cool.
And #2.
And #2. Last year I was 2 and 5, but no, this year I'm 1 and 2. So gold and silver, it's kind of fun. I'm a real money trader, done as much as 4.9 million in a single year, tax return proof. Let's go ahead and jump into our charts. Our first quiz question is as follows. On what date and title, what's the name of the chart pattern, the candlestick pattern, and the date upon which it occurred that indicates this stock market may be going downtown, Charlie Brown? We may get some sellers in the house. What's the first, I will pick from among the correct answers and give you a $5 Amazon gift certificate. So type in the answer. What's a bearish candlestick pattern that tells you the S&P may be headed downtown, Charlie Brown? Okay, we've got Morale, Philip, Mira, Wendy, Morale. Okay, our winner is Morale, M-I-R-A-L. Okay, that's it. I'll give you guys a little more time next time. I'm a day trader. I'm sorry, I'm a fast response kind of guy. But Morale, you got our first $5 Amazon gift certificate. Steve, what's this pattern? Morale got it.
Okay, do I win a gift certificate also if I'm right?
Hey, sure, why not, buddy?
Okay. That's a bearish engulfing pattern. But another question, and just not for a gift certificate, but what makes this bearish engulfing pattern even more important? And we'll throw that out to the audience. And I can't see the responses, Ken, but we'll give them a second or two.
Kevin got it.
Okay.
He got my particular pattern, which is good. He said 3 red candles in a row, and that's when I was going to add. That's what I look for. Right. I look for multiple red days in a row. That's a bearish confirmation.
But the correct answer is this bearish engulfing pattern is confirming a recent high. So you have a bearish candle signal confirming a Western signal. So And that's why I like working with Ken so much, because he's a true expert in Western analysis, including especially intraday. And when you add candles to it, you have your 1-2 punch for trading success.
Right. And now this is the first warning sign. The next warning sign would be if we lose the 200 SMA. That's the critical line in the sand that all the professional traders, we're all looking at this, right? We got a bullish cut pattern breakout. That's the next support level right there. So if we lose that, we may be good for here bottom. So good time to tighten up trailing stops on open longs, right? Now let's take a look. Our topic tonight is preparing for profits. And one of the things that Steve and I hope to accomplish is give you a sense of not only patterns to look at, but how to gain the confidence needed to trade correctly. Because confidence is so much a part of it. Let me ask you all, I'm just curious, when was the last time you put on a trade? Can everybody answer? When was the last time you traded? And don't feel embarrassed if you're new to trading, you haven't put on a trade yet. If you're just getting ready to trade, that's fine. It's better for you to learn ahead of time than to jump in there with money and not know what you're doing. So when was the last time you traded? I made over 3 dozen trades today. I'm just curious. Today, this morning, yesterday, today, 2 weeks. Okay, so relatively recent from a lot of you. Thanks. Now, our next, let me give you a quick, this wasn't an original 7, but I thought it'd be worth bringing up. These are my trades today, gang. Okay, these proof for my Fidelity IRA that I timestamped today, okay? My biggest winning real money trade was a 1-point win today in ZAYO. I have no idea what this company is. I have no idea what the news was that caused the gap. I just got filled at 25.85, okay? Just a little tiny test trade, but I bought 25.85. Now I got in ahead of the candlestick pattern on this particular 15-minute chart. I use a 1-minute chart, but for our next Amazon $5 gift certificate, what's the candlestick pattern that told me this was a good trade? It gave me a warm and fuzzy when I checked my 15-minute after getting in that my 25.85 long that I bought right there, boom, was a rockstar real money trade I did today. What would be that pattern? See, you guys are getting it. See, we've got wisdom in the house. We got Adam, we got Steve, Bob, Ian, Nan, hey Nan, morale again. Limit 1 per person morale, but thanks for the smart people always speak up. Kara, Mira, Ron, Roger, Doug, Kelly, Ron, Wendy, Barry, Michael, Martha. Let's give it to Ron S. Ron S, you got it. And that's a hammer, right? It's hammer time. Ba ba da da ba da. But now I bought 25.85. But Steve, any comments on this? I mean, as a day trader, here's a quick tip, gang. If you're intraday trading, I use the 1-minute chart. And if I see small tails or bullish lower shadows, I know it's kind of hard to see on this chart, I'll often go in long above the nearest 10-cent mark, which is why I got in. I bought it at 25.85. And there's proof from a real money trade confirmation, today, right? So anyway, that's a real money trade I did. Now I got 1 point out of it. I sold the 26.80. I didn't write it all the way up here. But Steve, on this 15-minute chart, anything notable about the pivot hammer in this particular chart?
No, because the whole rising window, that whole gap was support. So, we know somewhere within that big gap between the 5th and the 6th was a support area. And another way to trade this, again, a little lessening profit potential, but we had that hammer, which had a white real body, which is like one of the best hammers you can get because the market closes on its high. Mm-hmm. For those a little bit more risk adverse, you could actually wait for the next session to see if the market continues to rally, which we did get right after that hammer. So, lots of ways to do this for those a little bit more risk oriented, or, you don't have to wait for the bullish confirmation. For those who want a little bit more bullish confirmation, you could buy on the next close. But there again, although you're increasing the odds that the hammer is correct because you get bullish confirmation, you have also increased your risk because the stop should be under the low of the hammer. And obviously, if you're buying at a higher level, you have a little bit more of risk. Not much, you're talking about 20 cents more, so not a big deal. But, a little bit more advanced strategy on candles I figured I'd throw in. Smart.
Yeah, good point. So, and that's one thing I like working with Steve is he always talks about trade management. It's not just about the pattern itself or the specific candle pattern. It's about putting it in context, like what Steve calls candles in context, right? Looking at context of the overall technical picture and how to manage your trade correctly. Now, what's another? I'll give away one more Amazon gift certificate right now to the first person who can tell me. And this is for advanced traders. This is an advanced uh, chart pattern. What is another? What's a? So that's the voice of the East. Okay, and again, to learn how to trade both East and West, make sure that you get the stock trading success system with Steve and I. I doubled down on the offer. I'm adding my normally $500 Trade Mastery coaching videos included free. So this is that's $497. The stock trading success system is now only $495. So you get both systems for the price of one. But back to our regularly scheduled program. What's the Western signal that confirms a gap up that this pivot made sense? What's the name of the pattern? $5 to a randomly chosen person who correctly names that. What's the name of that pattern? Where something runs up, it pulls back down to half, that's your hint, and then keeps resuming its uptrend. That's why I like when I have both East and West. That's why so many hundreds of traders have loved the stock trading success system, because it's not just Steve, not just me, but 1 + 1 = 3, like Steve says. Okay, the only person that got it right is Kelly P. So you got it right, regression to mean. It's a mean reversion to be. I used to be a corporate statistician for the Ford Motor Company, and the numbers come in handy. Of course, in manufacturing, we want flat lines. We don't want all over the place. As traders, we want. So when you get I like Elliott wave too, if you think about wave 1, 2, 3, but it's a mean reversion. So a gap or a window that fills to 50%, that closes 50% and has a hammer is often a very good entry. So that's why I bought 25.85 and my trailing stop sold me at 26.89. So I got over a 1 point win. Boom, flawless victory on that particular pattern. So combining those patterns makes a lot of sense. And as an active trader, you've got to know this stuff because you're competing against guys like me and people like Steve and professional traders. And if you're not prepared, you're going to get your head handed to you, right? Now let's take a look at this particular momentum pattern. We didn't really see, at least I don't see, Steve, any reversal here, but I do see the Western voice of the West of a breakout above these moving average lines. And what I like about this chart that I wanted to bring to everyone's attention was the pattern that I like is buying above large whole world body green candles. And see, I don't have a quiz question on this one for everybody, but Steve, any comments on this from kind of momentum trader standpoint? Because this was a good initial move from here. It broke the moving averages here, did a nice steady uptrend, and then exploded upwards this last week or so. So this all green candles makes for a good breakout, right?
Right, and one of the things I like looking at, since it's such clean-cut resistance, is actually, for those of you who follow some of the things I do, once the market got above the resistance area, what should be new support? And it should be the old resistance, right? Multi-tested resistance, right around 33.5. It didn't pull back to that, but if you decide to buy above a breakout above that resistance area, my protective stop would have been somewhere in the 33.5. So
right.
And that's how
exactly.
I like using. That's how I like using horizontal support and resistance lines.
Yeah, and that's another good thing. I remember a good point you made, Steve, too, is that if you're buying pivots, if you buy off near what looks to be a pivot low, the neat thing about that is you can put a stop relatively tight under support because you don't have as much downside risk. You know, obviously, where support's going to be. So
right, and although that's where you just had, it was not a classic case of a bullish engulfing pattern, because the bullish engulfing pattern is normally a green candle wrapping around a red candle, and
right.
it quite didn't, but it was very close to being a bullish engulfing pattern, and below the bullish engulfing pattern should be a support area. So you'd set, as you mentioned, Ken, a stop under that.
Right, yeah, if this one had been down there, not a BE, but almost, but if it had been down
Right.
here, then right under there would be support. Now let's take a look at another chart.
And one of the other things, if I remember correctly on our in our courses, one of the other things I point out, you don't have much time for all the nuances here in this, but if we go back to that chart again, okay, and that green candle, look at the volume on that green candle compared to the prior session. So yes, it's almost a bullish. I would actually really call that a bullish engulfing pattern, And one of the things I focus on in our education is combining volume with candlesticks. And here's an example. You have a high volume green candle confirming what the candlestick line is showing you, that the bulls are taking over from the bears, and you have volume confirming it. And there are strategies you could use with volume and candles, and with volume and doji and so forth. I obviously won't have time to get into here, but I happen to see that high volume green candle, so
Yeah,
I
that's
figured
a good
I'd
point.
discuss it.
Yeah, whenever you see a reversal or pivot, it's always good if you're in the direction of the traders vote with volume. So yeah, when you see a high volume candle, especially if it's a pivot candle. Now, let's our next quiz question for everybody. What date and what's the candlestick pattern that would have told you to get out of SSRM? These are some easy ones. Some of you may not be familiar with the basics of candlestick charting. What we want to do is kind of highlight not only the patterns, but how to combine a risk management strategy to help you prepare for a potentially more profitable trading approach using Western technicals along with the candle pattern. So what's the pattern here that would have got you out? Mira, Ron, John, Philip, Ron, Ian, Stan, Adam, Doug, Barry, Wendy. Got it all right. I'll give it to Phil C. Philip C. got it. We got a bearish shooting star here. Now, Steve, now one thing I learned from you, which is very accurate, and it helps a lot in my own real trading, so thanks. Okay, so you see a shooting star, now what? So if a trader is new to candlestick charting or they don't know risk management, which is the most important part of all this, they see the shooting star, they don't want to be like a deer in the headlights. Where do they get out of the trade? Let's say they bought in during the breakout and they're happy it's up a couple of points. They want to lock in their profit. And to prepare for profits, you've got to prepare to exit your trades. Your exits are more important than your entries. And that's very, very true. And that's why candlesticks are so powerful, because they give you very, very obvious, correct exit strategies. So, but Steve, what would be the thing that would tell people to exit this?
Actually, the next session or two, because what I would have said with this, although it's a shooting star, it's a new high close for the move, right? For the whole move. So that's a little bit of a positive. So that long upper shadow is a bit of a negative. What I'd probably do is scale down into an intraday, because it's a high volume day, and I'd want to see where most of the volume was. Was it near the highs, or was it near the close? But even if you were just looking at a daily chart, or say this was, an intraday chart, doesn't matter. The next day, the doji would be telling me the market's tired. So I would use that as a signal to definitely lighten up. Where I probably would have exited most of my position was after not the next doji, the doji after, on that red candle over there. Because even with the two doji, the market is still hovering near the high closes. It's holding in pretty well. And on that second doji, you had a long upper shadow, which is a little positive. But when you had that red real body with a much lower close than, the prior 3 days, that's when I would have tended to exit most, if not all, of the position.
Okay, that's smart. And that's something thanks. I just learned something new from you. I didn't know that about the high volume close, and that makes sense. It's still a directional up with volume, so that gives strength to the trend. So it's not throwing the towel completely, but play it cautious and exactly what you said. See what happens subsequent to that. And if they get tired and then you get a red candle that reverses or rolls over, then that's your exit, right? So good.
Right. And if you want to drill a little bit more down, it's a high volume session, but this is a daily chart. I would look at I'm not an expert on 30 and 60 minute. Normally I don't look at them because I mainly use daily charts because I'm not focused on the market like you are intraday. But if I was, I would be looking, like say at the end of the day, it's a high volume, but where did that high volume emerge? Was it up at 1520 or 1480? And then we have a bearish candlestick signal on an intraday chart on high volume. That would add a little bit more credibility that the market might be turning. So, I'd scale down into an intraday chart.
Okay, and that's fine. You bring up a good point, and that's that one thing that I found it helps in my own trades too. We're going to switch to an intraday chart right now. The best intraday chart I've seen, one of the best ones all year, is this BPTH. And let me ask traders, I don't know if any of you are trading this, what's the name from a Western technical? So not a candlestick pattern, though there is a couple of candlestick clues here as to where to sell. But what's the basic pattern that told you this would have been a screaming buy, like I bought it earlier today, and schwang, It doubled. It went from 7 to freaking 14 on millions of shares per minute. This was the hottest chart on Wall Street today. Who else was trading BPTH? I hope all you guys and ladies got a piece of the action. But what's for another $5 Amazon gift certificate? What is the basic pattern that would have told us that would be a good long if it continues on up? Well, what's the basic pattern here? That say pre-market you're following, what's the pattern that told you this would be a good breakout to keep to scale into, to double down into, to ride all the way up into double territory, or even just a few points? Even 1 point, heck, is good on a $7 stock, but this guy has lots of volume, and it ran up all the way into lunchtime. It doubled into lunch, right? I played the bounce here too, but let's see, we've got Vipav, Ron, Barry, Vipav. Yeah, you got it. Vipav has it. So congratulations, Vipav. You're one of my new traders too. It's a small gap continuation. It's a minor window or a small gap continuation. It gapped up here and it continued to get new highs all morning long. Think of how much money. Now again, the wrong question to ask is why did it go up? Because what's the correct answer? More buyers than sellers. That's as far as a professional trader thinks about it. All I care about is the money. So I don't care what the company is. I don't care what the news was. All I care about is getting my piece of the action. If I get along over 8 and I scale out near 10, I buy again over 10.50. I'm out at 12. Stick a fork in it. I might buy the pivot here, which I did. Moves up a little bit. We're all done. But it's all about the money flow. So, Steve, from a candlestick standpoint, anything? My Western signal, by the way, my Western candle pattern is my candle pattern is I like small followed by large whole real body candle. That pairing often is a good momentum signal, like baby bear, mama bear, papa bear. Small candle, large candle. Not very sophisticated, but that's just a straight momentum visual that I look at. But Steve, anything from the voice of the candles on reasons to sell up here, or why it was getting tired up here after it doubled today? What would have got you out of the trade, or what would be a cautionary sign for intraday traders?
Okay, so a couple of things. So go to the candle to the left, the red candle. To the left, yeah. Okay, now there's a pattern called the dark cloud cover where the red candle gets more than halfway into the green candle, and this was not, because it didn't get more than halfway. So that was not a candlestick signal to really be nervous about. The one that would get me nervous is if we go 3 sessions later, we have a classic bearish engulfing pattern, the red wrapping around the green real body.
Right.
And as we pointed out before, a lot of the candlestick signals could be used as support or resistance. So the high of the bearish engulfing pattern could be a potential resistance area. And we see the market pushed above it, but didn't close above it. So with that confirmation there in the next candle, that would get me nervous. And that was a good buy that he did near 11 because he had a hammer down there. Right around 11,
right,
yeah, confirming the recent low, a little tweezer's bottom.
Mm-hmm.
So that was a nice trade there, Ken. And then he had a bullish engulfing pattern the next day. So
right, and a tweezer top kind of thing up here going on too. So
right, exactly.
Mm-hmm. See, the thing that hopefully that all this dialogue that we have with you folks is that we hope that it gets you thinking in a more structured, more confident way about your trades. Because go ahead, Steve. Yeah.
I have another question. Again, not an Amazon thing, but there's a doji there, and there's another doji 4 sessions later. Why would you not be bearish on those doji? And the plural doji, by the way, are doji. And it's kind of something similar to, I think we talked about this a couple of markets ago.
Mm-hmm.
And the reason is, drum roll, although they're doji, they're either at a new high close for the move or holding the prior high close. Mm-hmm. So for something like that, I'd want to wait for bearish confirmation before turning negative. And notice we did not get bearish confirmation the next session.
Right.
So again, the importance of not only recognizing the candle signal. Yeah, you can go to the internet and see what a doji is, but knowing how to use it correctly is really the key to trading success. And that's what we do. We take you to the basics and beyond, showing you, not only how to use doji, but all those special little nuances, like, for example, like I just mentioned.
Right, and to step into our system here, one way that you can, and I'm going to put tonight's webcast here for you guys, so you'll see it there tomorrow or something, and record it. The stock trading success system has been rated one of the top in the industry, and it was for years priced up at $9.75 back when we were selling it as a physical DVD system, but now we're offering it in a downloadable video format, and so for that reason, we cut the price in half, and it's only, I think, what is it, $4.95 for the entire 17-hour system, which is a really good deal. So if you're not yet an owner of Stock Trading Success, do order it. It's 16 gigs, so it takes a while to download. Take your time, take a couple weeks if you want or whatever, but you get 17 hours of training, and what it does for you is give you recordings, kind of like being at a live seminar that Steve and I did quite a few years ago. The concepts hold up great though, and Stocks and Commodities said by the time you're done with it, you'll have gained enough knowledge to trade for a living. And that's really high praise coming from Jayanthe, who's seen it all, right? She's seen every system out there pretty much, and to get that kind of positive feedback is great. And then of course there's a lot of
it says DVDs, obviously, this is downloadable with everybody downloading everything and, streaming it. We decided to make it downloadable. And although, I know many of you are not trading yet, and what's great about these 17 hours is you can see here, Ken, actually, can you show him the way he broke up some of the chapters? Ken spent, I can't imagine how many days, just breaking up the chapters to make it really easy to focus on what you need when you're ready to use it. So, for example, maybe you're thinking about starting to do some paper trading and you want to find out how to use protective stops. So you go right to that section. So this kind of like when they had the old Encyclopedia Britannicus, it was like an ultimate reference guide. You didn't read the whole encyclopedia from A to Z, or for those of you in England, A to Z, or Australia. You just had it as a resource to watch, to get to the section that you wanted whenever you wanted. And now with this streaming or downloadable version, you don't have to worry about which DVD to put in. You just click and boom, it's right in front of you.
Yeah, and so it comes in bite-sized chunks, like Steve said, like 15-minute segments for a total of 17 hours. Now, one thing that you also get, we'll get back to the charts in just a second, but I wanted to make the quick offer here while it's still on my mind. We're doing a 2-for-1 bonus offer for the next 4 days only. I've never offered this before, but I'm also including my Trade Mastery coaching course. And this is, you can see hundreds of testimonials from traders who like it and all that kind of stuff. It used to be a 1,400. I'm saying, please learn how to trade already. Anyway, I used to charge $14.95, and it used to be a webinar series. But instead of doing webinars every month, I decided to just record a year's worth of the webinars. And so it's a very advanced coaching. This is like my answer to those overpriced $10,000 coaching programs you may have seen elsewhere. This is included free with your purchase, and it's at the same. It retails at the same price at $4.97, and the Stock Trading Success is now just $4.95. So you get, I think it's how many hours? I have to double check the hours of this. Something like 15 hours of training in addition. So you'll be getting like a whole week worth of training for the price of 1 or 2 small stop losses. So it's over 15 hours of professional training. Normally that's $4.97, but not for you if you order now. And this is valid only for all orders. For those of you who ordered within the last few weeks, I'll give that to you guys because we had a few orders come in the last couple of weeks. But until March 10th, once you order the Stock Trading Success System, you'll also get the Trade Mastery Coaching Program. And I'm a real trader, as I've shown you with proof. So anyway, do consider that at www.stocktradingsuccess. It's well worth. It's only $4.97. I mean, it's way underpriced. We sold it for years up at anywhere from $9.75 to $12.95, and hundreds of traders found it worthwhile. And you can see here's like my Fidelity account from today. I won't say I'm a total maniac when it comes to trading, but I love trading. It's what I do. These are all my trades today. I was trading in and out of a lot of instruments. Now, it's not just for day traders. It's for swing traders as well. So let's get back to, well, actually, let's do one more intraday chart. For all of you Amazon gift certificate seekers, let us take a look at this. And what would be a good question? Voice of the West. What's the Western technical support signal in this gap? What's the Western technical gap support? I was trading this one again today too. Abercrombie and Fitch. Really nice breakout, right? But what's the support? What's the concept from a Western technical pattern that makes sense for support for the gap here, for the window. Who can tell me? It's high volume, but what's the price? What's meaningful about the price at which the gap started? That's probably a better way to ask it. What's meaningful about the price at which the gap started to make this explosive 2.5 point winning breakout? This guy ran 2.5 points, 24 to 26.5. So what's the important thing about the entry? I still haven't seen it. Thanks, I got a lot of answers. Yeah, Wendy got it. Wendy M. Candle break at the whole number, and that's what I want. That's what I was looking for. Whole number support. One of the things that you'll find whether you're day or swing trading is that whole numbers tend to act as very key support and resistance for different price action patterns. You'll often see your breakouts or your gaps find support at whole numbers and trading within whole number ranges, say between 24 and 25, 25, 26, 26, 27. Or for a swing trader, you know, if you buy, say, 24.5, that tells you could put your stop down at 23.5. So, Wendy, you got it. Congratulations. Hey, Steve, anything from Voice of the Candles on this?
Not really. Again, another doji, right on like the 5th day there, but it's another new high close. So you wait for bearish confirmation, which has not happened. So
right, it's still up in the sky here. I love trading charts that are up in the sky because that's where institutional volume comes in. That's another quick professional trading tip, folks, is if you're one of the best things you can do to avoid getting stopped out is only trade charts that are above the previous day's high or have dropped to a key support level. You know, my favorite pivot, by the way, is a gap up that fills to the previous day's high and then bounces. That's going to be, and especially if you have a hammer, bullish engulfing, that's going to be your best pivot play. Your best breakout play is a minor gap continuation. So that'll do it. That'll wrap us up for the intraday. We got just a couple of swing trading charts left here. Let's take a look. I think we've given away 10, but let's, just in case we haven't, who can tell me the candlestick pattern that would have told you we're still in a high volume breakout territory, but what would get you nervous about being long if you're still long here? What would be the candlestick pattern that would tell you to tighten up a trailing stop? That's what I do. I use the candle patterns to manage risk and to tighten in trailing stops and for position sizing to scale in if it continues. So who can tell me what's the pattern? Yeah, Ron L has it. He said inverted hammer, and that would be a shooting star. But yeah, an inverted hammer. So Ron L, you're the winner. And Steve, anything to add to this? I know it's still a nice strong uptrend, but that shooting star would make me nervous to tighten up a trailing stop. I don't know that I'd get out yet because we're still holding price action up there, but we're seeing the signs of potential trouble on the horizon, maybe. What do you think?
Right, yeah, and I think the trend is still mainly up because of that rising window that keeps the gap higher, keeps the trend up. The only thing I'm a little bit nervous about is the last 4 sessions we've had right around the same resistance between 620 and 625, so we might be expanding on a top. So I'd like to see a close above that to confirm that we're still in the uptrend, but that one shooting star wouldn't be enough to get me that nervous, but the fact that the next day couldn't get above the shooting star's resistance area, and the next session, and the next session, and the one after that, I would certainly be tightening stops because we're kind of expanding on a top. But like you said, Ken, it's still holding the highs very well, so I would be net long.
Right, and that's a good point. Now, traders, a lot of you notice, please, this is a cheap stock. I am expanding coverage to small caps. The trick about trading these guys is if you're going to swing trade stocks under $10, for Pete's sake, make sure you've got charts with good sustainable trend strength that are directionally strong with a nice near 45-degree angle breakout for week after week after week. What you don't want is these pop and drop chops that you see a lot of stock picking services advocate, because you're going to get in trouble with those. What you need is consistency of trend. And one thing that's neat about the candle patterns is they'll tell you if you're in trouble, right? And I don't see any troublesome signs here. That's kind of the first sign that we may be getting, like Steve said, a little tired, but it's still a good directional breakout. The volume's dropping, which isn't good, but it's still looking good. And our last chart, okay, this one's kind of obvious, but what's one of the two signals that would have told you on this $5 chart it might be time to stick a fork in it or go to cash and scale back out of your trade and potentially close the trade down, or at least tighten up a trailing stop. Remember, you can scale out of your trades. You don't need to make it binary. Most of us who are professionals do not do all or nothing. We scale in, we scale out. You take a little off the top, you tighten in your trailing stop, you add if it keeps going up, you re-enter if it does eventually keep going up, and the rest of it. Wow, you guys all got it. Chris, Ron, Mira, Mike, BW. Chris T, since you got it first, I'll give it to you. Chris T, K-R-I-S-T. It's a bearish engulfing up here. That's kind of obvious. Like the earlier pattern, we have a couple of red candles here. Steve, any note from the candles on the bearish engulfing up here?
Yeah, it's a bearish engulfing pattern, but it's still holding the support area right around, looks like around 498 in that zone there. So it got down there. So, so the bearish engulfing pattern should be resistance, but I think that support there, we have like a hammer, we have like back-to-back hammers underlying, confirming support around 5. And then under that, I'd look for support at the rising window right around the 460. But yeah, the bearish engulfing pattern should be resistance, especially in the high volume on that red candle on the bearish engulfing pattern.
Right near the 540, right. Okay, good point. And so we've got some good patterns. Now, one thing that I wanted to mention to y'all, and you may have seen my Stocks and Commodities article on the topic, is the range of the instrument is critical. If you're looking for a good breakout pattern, do be sure that you're trading instruments with good multi-point trading ranges that have reasonably strong volatility. What you don't want is a chart like Intel or Microsoft or something with just a few points of range. So the range combined with candles and breakout patterns is something that makes a lot of sense. So let's see. I think I gave away 10. I wasn't keeping too close track, but in case I didn't, I'll give away a few more. What else do we have here? Let's see. Here's one that I'm looking at for a bounce. TVIX, if we're using a whole number resistance, what would be, and again, this may be subjective, but above what horizontal price point would TVIX, actually, let me see if I can find an easier one, because it may be subjective. Okay, let's say you're looking at TZA. Above what technical signal, what price point would be a good long in TZA if you're looking for a recovery over a major moving average? And by the way, and also, or what's the candlestick pattern that would confirm a bounce in this guy? What's the candlestick pattern that would confirm a bounce, and or what technical resistance? Because again, these are the inverse ETFs, and these are the guys that are likely to run up if the stock market keeps selling off. What I love about these is the profit potential. This guy had been 18, got cut in half. A mean reversion pivot exit target would be 1350 or so maybe good for something. What do we got here? 1050, bullish engulfing above the 200 SMA, 1060 or so. Bullish engulfing. Now let's go to Heinz. Heinz, you've got it. H-E-I-N-Z-D. Heinz D. It is looks like a bullish engulfing there. And I don't know if that is in fact a bullish engulfing, Steve, but it looks like one, sort of, kind of to me. And I like the fact we got 3 green candles, like the opposite of these rollover charts that had been running up that are starting to drop. For pivots, you have to first of all look at the profit potential. Is there enough points there to make it worthwhile? The answer is yes for this chart. The other thing is to look for candlestick pattern, whether you have hammers or bullish engulfings, and then resistance using things like the 200 SMA, above which would make sense to go long. Now, Steve, any points on this regarding
candlestick? Two more questions. No Amazons, but 2 questions. So question one, what is volume showing us on that bullish engulfing pattern? And yes, Ken, it is I'd view it as a bullish engulfing pattern.
Okay.
So what's volume showing us?
You're the expert.
I
still don't get it right all the time. And I've been working with you like 15 years. You guys don't learn candles from anybody but Steve Nison. He's the expert because Anyway, go ahead. I'm sorry.
So what's the volume showing us in the bullish engulfing pattern? Look at the volume on that green candle compared to weeks and weeks, but definitely, it's much higher than the volume of the red candle. So it's showing us, and what's the phrase you said with volume? It shows, what did you say, Ken? I usually say it shows the force of the market, but what was the expression you use? Volume is I remember you said it before. I forgot how you phrased it.
I'd say traders vote with volume.
Right, but yeah, that was a great expression, right.
Yeah.
So you have that, and what else do we also have? Why is that bullish engulfing pattern more likely to confirm to be a reversal than not? And that would be, look at the prior, what does this say, daily chart? Look at the prior week, look at the low, 9.
Yeah,
so
right.
The bullish engulfing pattern is confirming a low. And what's great about the bullish engulfing pattern, if you're buying it, you have a really clean cut support area because you had the lows from the prior week and you have the low of the bullish engulfing pattern. And a high volume breakout today,
Yeah, look at that. Wow, that's today. That's yesterday, and here's today in this guy. So, if you guys trade, by guys, I mean, if you ladies and gentlemen trade inexpensive instruments, do make sure that they're ones that have trends, that you have reversals for, that have upside potential. And that's the kind of thought process when it comes to developing confidence and preparing for potentially profitable trades. You really need to have a reason for, like Steve says, and like I say too, if then thinking, if this, then that. So if, say, this bullish engulfing holds true and it breaks out to new highs, then, hey, maybe we got a live one. Maybe it's worth trading. Now, this is the immediate technical resistance for professional traders, is the 200 SMA. So I'm not going to buy this until it gets over 1050 myself, maybe 1060, like one trader mentioned. But that would be, again, not a trade recommendation, but that's where I'm going to buy some. And how much do you think I'm going to buy? I'm only going to buy 100 shares. I'm not going to buy like 1,000 shares. I want to minimize my risk. And I want to teach, or just mention that you want to position size or scale in above, nearest resistance areas. So anyway, I'm pretty sure we gave away 10 and we're running a bit over time. So does anyone have any questions about this? If this is the first time in history I used to charge and get from hundreds of folks $1,500 a year for this program, which I since just made a recording of, 15 hours of recordings of. You can see lots of testimonials and excited comments from real traders in my Trade Mastery coaching program looks at financials, discipline, and technicals, and it's really designed to give you a step-by-step approach explained for how to develop a thoughtful, intelligent way to trade the markets. And I'm including that. That used to be my premium coaching webinar series. Now it's a downloadable video series that I'm throwing in the mix to make this hopefully an irresistible offer. It's an offer I would jump on. It's, no BS. It's honest training from 2 top industry experts. You get a total of over 30 hours of training, 15 hours in the Trade Mastery coaching, 17 hours in stock trading success, and it's only $497. And there's no, BS add-ons. We don't say, oh, and by the way, now that you bought this, go buy that, and now that you got this, sign up for that. No, none of that. It's you get both of the courses included for just $497, which is totally cheap, because when we launched it, it retailed and hundreds of people happily paid and gave us glowing testimonials at $975. So it's half the price and double the trading goodness because you get 2 courses. So and it's honestly a really good deal. So I mean, hey, stocks and commodities said you've got enough to trade for a living. That should be good enough for everybody. Any questions? Let's see. Question from Bob: does the course help you find stocks setting up scans? Yeah. One of the things that Steve and I cover in the course, and I'm glad you asked that, is we do look at a lot of examples of start to finish entries and exits, trader coaching. We have hot seats of trader problems, talking about building confidence and preparing. And this is a really unique thing that stands alone in the entire trading industry. No one else in the world does this. I'm frankly surprised people haven't copied this. Competitors listening in will probably copy it someday, but not yet. We have hot seats in which traders came up and asked us questions most challenging trading problems, and the group was kind of like a mastermind group. All the traders there answered questions, and then Steve and I jumped in with our answers as well. So that's unique. Plus, you get all kinds of technical patterns and breakouts and all kinds of good stuff. So that's why it's got over 100 testimonials. And, the best, it's one thing if Steve and I say it's great. It's something else if, well, the world's top trading magazine says it's enough to trade for a living, plus over 100 testimonials from traders who found it valuable. So thanks all for being here. I will get the video. It'll replace the one that's currently here that we did back in November. So we do these every 6 months, and this is the best deal we've ever offered on the course. Now you only have 4 days because I know everybody's busy, so we're not going to drag it out. And it's only $497. So back when we charged and got up to $12.95 for this, over $1,000, we gave people 2 weeks to give it some thought because it's over $1,000. Now it's less than half that. It's just $495, plus you get the Trade Mastery coaching system included free as a bonus. And so you do have 4 days to order. This offer expires forever and does not get extended or repeated on this Sunday, March 10th. So you have my word, it's a total great deal. For $497, you get over 30 hours of video training. So it's a heck of a great deal. It's half what it used to cost, and we hope that it'll provide value to you and help you become better at your trades and gain more confidence. And if you're a new trader, if you're an experienced trader, there's a lot here that can help all kinds of experience level traders. Steve, any final thoughts before we wrap for tonight?
No, I think you summarized it really well, Ken. And what I say is the sooner you get this, the sooner you can start using these ideas. And what Ken and I did, remember we were here 45 minutes. These are hours and hours of education. Again, keep in mind, very important, it's bite-sized. Whether you're currently trading, if you're trading now, you could certainly use these strategies in your current trading. If you're thinking about trading, or if you're paper trading and you want to go to the next level, here's a resource that you'll have for forever.
Yeah, it's good, and it's been a standard in the industry, and it's been a pleasure working with you, Steve. All these 15 years we worked together, over 15 years, and and time flies, right? Well, actually, it seems like it's been a long time, but it's 15 years. It's anyway. You guys can take a look at all the testimonials and all that kind of good stuff, and it's a great deal. And so I hope that you'll give it some thought, and hopefully we covered it. Let's do one final, just to make sure I covered 10. And by the way, this is a quick giveaway, a quick bonus tip for all of our home listeners is all the inverse ETFs. I'm going to be starting to trade these for swing trades. I'm currently overnight long in TVIX and LabD. Give preference to the ones with the biggest trading ranges, depending on your risk tolerance and experience level. But what's one thing that you notice is a good confirmation that, say, LabD might be, what's the technical signal? And Steve mentioned it earlier, and I completely agree. What's the one thing that jumps out on this chart that tells you that a bounce might be a good play? It used to be $62 a share, now on sale for the low price of only $22 a share. One more Amazon gift certificate. What's the technical signal that tells you today's green candle, which I was trading today multiple times, boom, flawless victory. What a chart, right? This guy ran from 19 to 22. And to quote the Sicilian in The Princess Bride, wait till I get started. This guy may be good for quite a bit more. What's the pattern? John R. got it. It's volume. Hey, Chris, good question. So John R., you got it. High volume, insanely high volume, 10 million shares today. Like Stephen mentioned in the other chart, higher volume. This is 90-day high volume. Quick tip, folks. When you see a directional candle on multi-month highest volume ever, the volume was crescendoing as it sold off, but then the buyers stepped in, and we've got the highest volume on the entire 90-day chart in green territory and green candles. So that's not to say it's definitely going to go up. Maybe next week or tomorrow it drops, but it may be well putting in a base here, and it may be a good pattern for a upside move, at least up to 30-ish or so. That's my exit target for my trade. So, Steve, any comment on volume here? But I like the high volume candle breakout today. It's a pretty good sign that buyers may be back for a bit at least. We'll see.
Right, yeah. All right, what especially good was it broke above the highs from last couple of sessions, 3 sessions. Looks like about 20,
Right.
last three, right over there. Yeah. Yep.
Yeah, it's a multi-day high, so no guarantee it's going to keep going up, but the profit potential is usually, by the way, last tip of the night is usually 50% or so. Best case is 50%, a mean reversion bounce of the previous range. So exit target best case on this guy would be around 42. That's about half. I'll be in and out of this guy if it chops on its way up, but anyway, we've got lots of great charts, and hopefully this has demonstrated some level of technical trading expertise on Steve and my part, and hopefully we'll earn your trust that for the price of only $4.97, and we promise there's no add-ons or extra stuff to buy. It's, you get both systems for one low price, and it's only $4.95, and you get the $4.97 program included as a free bonus. So I decided on that just this afternoon, by the way. I was trying to figure out how can I make this such a compelling offer. It's like a must get. If you're on the fence about it, this is something that would push them over the edge. And this is a great value. So previously the total value that the two systems had been together would have been what, $12.95 and $1,200, but now only $4.95. So it's a good deal. So thanks everyone for being here. Thanks for your attention. Steve, sorry we ran over a bit. I was trying to keep it
Oh,
to
no, no, it was all valuable stuff. Yep, I think the audience was very pleased that it did run long. A little extra free information.
Yeah, and I learn a lot from you too. Every time we do something, I learn. And by the way, folks, that's the great thing about learning from Steve Nison is the well runs deep, and like the world's top expert in something, I learn stuff every single time I do a web. It's true, no BS. I honestly learn new things from Steve every time we've done a webinar for the last near 20 years because he knows his stuff, right? So there's years of content I could learn from the guy. So and you guys can learn from us too. So anyway, thanks so much, Steve, for taking time to do this, and thanks, traders, for placing your order sometime in the next few days. Question from a trader: how do you claim your Amazon gift certificate? Just hit me up with the support tab. I'll try and reach out, but if you would, if I identified you as one of the winners, and I will go back and double check, click on the support tab. And if you have any questions about the system, it's a Zendesk, so it gets through email filters. Put your name if you want, email address, and tell me that you're one of the winners, and I will get your gift certificate emailed out to you sometime in the next couple, 3 days. So everybody else, go ahead and order your system now. And let's get on with it, right? It's only $4.95 for both systems. It's 2 for 1. And again, the pricing you can see is down at the bottom here. It's just $4.95. Again, it's no physical DVDs. So that's another reason why it's so inexpensive, because we don't have to ship anything. So it's only $4.95. So no monthly charges, no recurring billing. You get it all for one tiny price. It's like the cost of a stop or something. So anyway, thanks, Steve, for being here. Thanks to all of you for being here. And we'll see you guys in the Stock Trading Success System Owners members area. So thanks so much for being here.
Thanks.
And bye, everybody. And I will get the video posted on the website here, hopefully later tonight or tomorrow, probably tomorrow morning. So take care. Bye for now.